Hello folks, this is Jeremy North with 360 IRA with your educational economic update for December 2017. So in this month's video, I'll discuss some of the major headlines that influence markets in November. I'll also provide insight into what these developments could mean to you as an investor. As always, please stay tuned at the end of this video for my very exciting required disclosure statement. Well, U.S. equities had quite the month of November. By the 30th, both the Dow and the S&P had hit new all-time highs, with the Dow rising above 24,000 for the first time ever. The S&P 500 also marked its longest run of the monthly gains in a decade. Throughout the month, we received a variety of economic updates that helped support this performance. As October's data came in, many reports indicated that the economy is growing. For example, the housing market showed strength as existing home sales beat expectations. The latest reading of new home sales also came in far above the anticipated results. The numbers were higher than they've been since 2007. In addition, consumers spent more in October, while their incomes also rose. This growth should be positive news for the economy. Consumer spending comprises about 70% of the U.S. economic activity. So higher spending can and should mean stronger economic growth. In fact, the latest reading of the GDP, or gross domestic product, revealed that the economy is already picking up some steam. During the third quarter, GDP grew by 3.3%, and that is the fastest pace in 3 years. Experts believe economic growth may slow a bit in the fourth quarter, but they still think GDP readings could be around the 3% mark. How much consumers spend during the holiday shopping season will largely impact the last quarter or fourth quarter's growth. With low unemployment and increasing incomes, we could definitely experience higher spending. And that includes probably my wife over these holidays. And looking at November, consumer behavior and new economic data are not the only topics that moved markets. One critical detail is and was tax reform. The House and Senate each released their long-awaited tax bills, and the markets had reacted to key differences between the two. In particular, the Senate's proposal to delay corporate tax cuts until 2019 contributed to a stock sell-off earlier in the month. Then, by November 30th, the markets hit record highs as Senator John McCain's support of the bill seemed to increase its likelihood of passing. As of now, no one can say if the Senate and House will be able to come together and create and compromise a tax bill that they can each pass before the year's end. Expectations for tax reform have pushed stock market prices up in the U.S., but uncertainty over whether the promised change will actually happen is affecting both market performance and consumer sentiment. As the tax debate continues, December should provide a lot of new information for the markets to digest. Also, many analysts expect the Federal Reserve to raise interest rates this month, which would be the third interest rate increase in 2017. We will continue to monitor these and many other economic details in December. As you know, we always welcome your questions about anything we covered in this video or anything else you may have on your mind. This wraps up my educational economic update for December. Again, nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give me a call at 636-896-4052. I'd be more than happy to discuss this or anything else you have going on. So here's the required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase of a sale or security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance never guarantees future results. Again, Jeremy North signing off, 360 IRA. Have a great month. Happy holidays.